You're with JustStocks. I'm Andrew Scott, speaking this morning with Tim Oldham from AdAlta. Tim, morning.
Good morning, Andrew.
Look, Tim, a strong momentum heading into 2024. Just outline for us initially, what are the big plans? What are the near-term catalysts for AdAlta?
Yeah, Andrew, the big priority for AdAlta right now is realizing, I guess, a return on the investment we made over the years in our lead product, 8214. We're closing in on the results of a phase 1 extension study to test the safety and tolerability of that drug in the doses we'll use in phase 2. Those results are due at the end of February. And we've got a robust pipeline of both investors, strategic investors in the asset as opposed to the company, as well as potential out-licensing partners queuing up for that data. So we're then move aggressively into a partnering mode as soon as those results are available. That is absolutely the biggest thing we can do this year. Success in that realizes and unlocks the value that we believe sits in 8214. And it also gives us this opportunity to then broaden the application of the iBody platform into a whole range of other areas, which we think is super exciting.
And Tim, of course, you've been recently to a number of big conferences, including JP Morgan in San Francisco. Tell us a bit about it. What was some of the feedback towards AdAlta?
So we had 3 real focuses at JP Morgan Healthcare in San Fran this year. Number 1 was progressing our partnerships around 8214. And what we're finding there is that our partners like the novel mode of action. We are still a first-in-class molecule, which is really important. They like the work we're doing with the phase 1 extension study, which answers a bunch of questions that they've got. And they like the fact that in the second half of last year, we were able to demonstrate, at least theoretically, the feasibility of a more convenient subcutaneous route, which patients can do it themselves at home, which would be amazing. So great feedback on that front and some very clear questions that we feel as though we're able to answer when we get into serious partnering. The second thing we're looking at was the broader capital markets in general. We generally felt that and got a flavour that at JP Morgan this year, the US markets are cautiously optimistic for 2024. And JP Morgan tends to be a little bit self-fulfilling. The brokers and the analysts there are saying what they think is going to happen, which of course means they then tend to go and execute on that strategy. So that was encouraging. I think the big message was 2021, 22 were aberrations in terms of access to capital. That's not the normal. Normal is back to 2018 levels, and we're starting to see that turn. We haven't yet seen valuations get there, but as we get through the rest of this year, I think we'll see that. And then the third thing we're looking at is what do we do after 8214? We're exploring very hard the area of cell-based immunotherapies, CAR T-cell therapies. We're getting a lot of feedback around the broad applicability of our iBody platform in that space. A lot of enthusiasm, both from investors and from potential partners. And obviously that builds on the success of our existing collaboration with Karuna Biotech. So there were the 3 big things that we focused on at JP Morgan this year, and positive news, quietly positive to really positive on all fronts.
And you're gearing up, Tim, for a conference in Melbourne next week, are you?
The Australian Festival of Biologics is on next week. It's a 2-day conference exploring the current state and future of the Australian biologics industry. Really excited to be on a panel there, and also telling the story of how we actually developed 8214 to the point where we can really present it with confidence to investors.
Look, Tim, just finally, you've recently raised a bit of cash. Talk us through your enterprise value, your EV, and how that compares to your peers.
Yeah. So it's a really interesting question, which I've been looking at as we go into the Festival of Biologics next week, thinking about the future of the industry. Firstly, our enterprise value, we've got a market cap of around about 12 million. We had cash at 31 December of about 3.8. We do have a little bit of debt on the balance sheet, but that's secured against our R&D tax rebate. So if you ignore that, then we're at an EV of around 8 million. What's clear to me is that in the Australian biologics or biotech sector, there is zero correlation between market capitalisation and the stage of your lead asset in your pipeline. So that to me says there is significant value opportunities out there if you think about the opportunities for those lower priced companies. So there are companies out there that have not got an asset in the clinic that are valued more than we are, for example. From a pure economic, hard-nosed, risk-adjusted NPV perspective, that makes zero sense. There's all sorts of soft factors that go into that. We're working really hard on that with our IR and PR strategies, but it's about getting the story in front of people and helping them actually understand that, as you de-risk your asset, as you get from preclinical into clinical, as you build your partnering networks, it's not all about your cash balance. It's about what's the future in front of you. And we think ours is really rosy. And so obviously as a CEO, I always think my company is undervalued. Well, usually there's very few CEOs, so it's not. But we genuinely think we're in a position now where a transaction around 8214 and some of the things we've got coming in the pipeline could really transform our company in the very, very near term.
Tim, good to have you on JustStocks this morning. Great to see you.
Thank you for having me again, Andrew.